The market managed to snap its 2-week losing streak to clock the biggest weekly gains we've seen in 5 months. The Sensex and the Nifty and the Midcap index all are up almost 2% this week. All sectoral indices have seen gains, with defense stocks being the biggest outperformers. And of course, we've had IT and pharma contribute as well. On Editors Roundtable, we decode the week gone by on the street, and we put the spotlight on India's booming IPO market. And we take stock of what the mutual fund trends are telling us. The October numbers came out. I'm Surbhi Upadhyay, and with me, as always, editors Prashant Nair, Nimesh, and of course, Nigel. And today we have with us none other than Nilesh Shah of Kotak Mahindra AMC, a veteran, a big market voice, and a great person to have. Given that the market is
supporter of CNBC.
Always a big supporter of CNBC. I was, when you say supporter, it's a politically charged environment right now. We've had the Bihar. I was like, which supporter? No, but it's phenomenal because it's great to have you at this time with us, Nilesh, because the market's flirting with 26,000 again. Yeah. So lots of questions coming your way, I'm sure. Thank you so much for joining it.
My pleasure.
So it'll be the first question, I think, with Nilesh Bhai is going to be, what a win, Nilesh Bhai, in Bihar, right?
This was way above expectation.
202, 203 seats.
Yeah.
What do you make of it?
Neeraj Bhai is still not very happy. He was expecting a full sweep. Like
what, 243?
Entire 243.
but I mean, no one expected
I think
it, right?
this is the mandate for BJP and coalition government. And they should now take steps to ensure that the economic growth model goes all across India. When one challenge for us is the kind of inequality. Bihar today is at levels of sub-Saharan Africa. I hope this mandate allows it to move from Africa to Asia.
But markets were a little subdued today in that sense. So you think it's...
In some sense, this was priced in.
Yeah. So what
So
next?
it's buy on rumors and sell on news.
So Bihar done, US-India now?
Yes, now the focus will be on US-India tariff deal. There has been some encouraging announcements from US side. We need to see the details of the trade. I was in US very recently, and my feeling is that everyone was interested in listening about India, but no one was willing to cut the check immediately. If a tariff deal happens, there could be some buying emerging and a relief rally coming into the market.
But your sense is November mein ho jayega ki...
I have no idea. Dawn ko समझना मुश्किल ही नहीं, नामुमकिन भी है.
That is a good one.
That is what we call it. We look for these. This is reelable. This goes on.
One-liners, and trust Nilesh to always have a new one up his sleeve. Absolutely.
But Neeraj Bhai, as you rightly said, you went to US, you met some large investors as well. Nobody is still willing to, write the check for India. What's been the key concern for them?
So I guess a lot of them have investments in India. Some of them are restrained by tariff deal not happening. They don't want to take political risk. Some are concerned on valuation. Some are concerned on artificial intelligence trade not available in India. Now, we have to position ourselves. So my message to them was that, look, we don't have LLM models on AI, but we have people who are making apps on AI.
Yeah.
Like on the voice AI, we have Luna and Maya 1. They are world-class, better than the best, which can sing, whisper, emote. So in emotive voice AI, India is a player.
Yeah.
Now, these are the kind of explanation you have to make to global investors to convince them that India is still a long-term good story. So interest is there. Checks are not being cut right now, but a tariff deal can push them to start cutting the checks.
All right, so Nilesh Bhai, always good to hear your thoughts, and we'll hope that they write some checks. But in the meanwhile, a lot of people like me and, are writing checks for the future. And we take your advice very, very seriously. As I always tell you, the argument between me and my wife is who's putting the bigger check into the mutual fund industry. That we'll discuss later. But if someone is cutting a fresh check, right now, there are various assets out there, right? Debt is one instrument. You have equity and you have gold. Gold has done phenomenally well. Sometimes you're a little bit subdued at home because you have put so much of money in the mutual fund. Returns are okay just in the near term. Longer term, we're going to make money. But if you're putting fresh money, what would be the split between the three?
So our multi-asset allocation fund is like Haath Kangan ko RC kya. Whatever I say is reflected into my multi-asset allocation fund. At this point of time, we are about 20% in precious metal, about 55% in equity, and about another balance in debt. I think this is the allocation for an average investor. If you are conservative, take down equity a little bit, take down gold little bit, and put into debt little bit. If you are more aggressive, you can probably go more towards equity from precious metal. But overall, this is what we believe is the right allocation for an average investor.
But
And I guess,
Nilesh bhai, you had a big call on silver. You still hold on to that view? Silver mein
Yes. So around April 25, we put 15%, which was maximum possible in our multi-asset allocation fund in silver. We have maintained that and increasing it. Silver obviously is a momentum trade, but there are various factors coming into play from industrial demand on solar panel and electric vehicle side, some fishing by central bankers around the world, some supply constraints emerging. So all put together, silver is in a short-term momentum trade. We are watching it carefully, but our outlook on both gold and silver continues to remain positive.
I just want to, on this, maybe we can pull up the stats from the numbers that we got, the mutual fund numbers from October. And while the headline is that the net equity number has come down, it's about 25,000. For me, because I look at personal finance, it's always a great sign because the flows into hybrids have gone up consistently through this year. And even this month, we had 15,000 crores go into hybrid funds. A bulk of that money is going in these multi-asset funds that Nilesh bhai is actually talking about. But on gold and silver, there's consistent money going in ETFs as well. It was 8,000 crores in September. And even now, gold being where it is, it was still about 7,000 crores. So is there a risk that's building up there? A lot of people are chasing the gold, silver FOMO. What would you say to them?
So the risk is don't chase FOMO. Please understand why we are bullish on gold and silver. It's essentially central bank buying. We are in some sense running ahead of central bankers. Every month, please open reports to figure out what central banks are doing. If they are selling, you need to get out of your gold position, which is what we will do. If you are seeing that central banks are buying, then stay invested in gold. In the medium term, the gold prices will be influenced by central bank intervention.
Underlying gold to ek baat hai, but look at something like a Muthoot, right?
Yeah.
I mean, that's a stock equity gold play. And it has done phenomenally well.
It has done phenomenally well because now there's no fear of NPA. Whatever they have lent, it's far more valuable today.
Nilesh bhai, Grow listed this week. Not a view on the stock, but it's just so India is a unique country in the sense that for a country with a per capita under $3,000, the level of access to financial products is unparalleled, right? Because of Aadhaar, mobile penetration, UPI, etc., etc. 12 crore unique demat account, 13 crore ke aspas. When we say the growth is secular, are we talking about this 12, 13 crore, the number, absolute numbers increasing, and in a way it's kind of related to what Surabhi asked, which is mutual fund flow, etc. Or now it has kind of happened now at this level because workforce is about what, 50, 55 crores.
Yeah.
Family of 3, so that gets you to about 39, 40 crores already. Agar mota.
Yeah.
So is it about more household savings shifting into, is that the game here or more penetration and expansion? How do you think about this?
So total vehicle ownership in India, including two-wheeler, is about 35 crore. Ideally, all of them should have a mutual fund SIP. Maybe 500 rupee, but they should still have. So today when we have 12, 13 crore demat accounts, how many have more than 1 lakh rupee in those demat accounts? That number comes down dramatically. So there is one story of penetration. People who have put 10,000 will go to 1 lakh, people who have put 1 lakh will go to 10 lakh, and people who have put 10 lakh will go to 1 crore. The second is the expansion. All 35 crore two-wheeler, four-wheeler owners are potentially my customers. I have barely touched 5 crore in mutual fund, 12 crore in equity. There are more people, dirting their end in cryptos and gaming than they have invested. So there is both possibility. Penetration as well as expansion.
Numbers in those accounts going up because just more allocation into the asset class, plus more numbers
size going
as well.
Sure.
But having said that, I mean, just to play devil's advocate, the fact is that at an index level, it's been a range-bound year, right? And we've seen some of that. If you look at the redemptions, I mean, the absolute number, I mean, amount of redemptions has been on the higher side. Flows in the large, mid and small, the traditional categories have sort of come down. Is that at all a cause of concern? And for the market it is, because that's the only thing that's kind of helped us right through the storm.
Here.
Yeah, sorry?
Keeping the market here.
Absolutely. So, I mean, you have your ear to the ground, you know the pulse. What's the sense on pure equity flows?
So some redemptions happened because it was festival season. By and large, people have taken money out to spend, which is good for the economy. We still believe that the flows will remain strong. There are new customers which are getting added every month. Last month, we would have added about 50 lakh. Second, incrementally, people are getting more and more comfortable with mutual funds, so they are putting. My only recommendation is that mutual fund matlab equity nahi. Mutual fund is beyond equity also. And which is why this multi-asset allocation category, debt fund category will become appropriate.
But equity mein flow kam hoga kya? If the market doesn't break into fresh highs and picks up momentum.
See, please remember that the last month inflation number came at 0.25%, lowest in our lifetime. I have never seen that number in my life. Now, when your inflation is low single digit, how much more return equity can deliver? The real return will be 4, 5, 6%. It can't be 20%. So people will have to adjust their expectation. You have to moderate return expectations. You are not going to get 20% return in 1 year. It may come in 2 years, but not in 1 year.
But going by this inflation print, what do you think? The RBI will go full hog, 50 basis points in December? That could be a likelihood? Or do you think they'll go for 25 and then another 25 in the following?
It's very difficult, Nigel. We have seen how Fed's,
tragedy, yeah. The
trajectory
last cut
has
was
changed.
more a hawkish cut.
Absolutely. So they'll have to consider rupee, they'll have to consider Fed, and they'll have to consider forward inflation. Now, yes, the last month inflation was lowest in history, but forward inflation could still be in mid-single digit. So it's difficult touch and go equation for RBI. If they had cut earlier, it could have been justified with this inflation number. But if they cut now and 6 months down the line inflation goes up, then they will be on the wrong side.
Okay, that's about RBI. What about from the centre's perspective? The collections haven't been as much. The capex spend has been superb, in the first half of the year. Now, the second half of the year, how do you see things pan out? Because capex spend obviously needs to cool down a little bit. They have front-loaded it out there. But the collections may not be as much. If that's the case, do you see the fiscal deficit getting widened a little bit? Would that be digestible from a market's perspective?
So with the GST cut, equations are open. The last month collection number came reasonably solid. April to October GST growth was about 9%, 1% less than the nominal GDP growth of 10.1. Now with this inflation, you are not sure whether nominal GDP growth will be 10 or it will become 9. If it becomes 9, then GST collection till now, despite rate cut, is reasonably good. So my feeling is that government has levers on the fiscal deficit side. In all probability, they will use those levers to ensure that we don't go down exceeding the fiscal deficit target. More importantly, we have also put target for the next year in last year's budget. So my guess is that government will leverage other tools to ensure that we remain on the path of fiscal prudence.
One big theme of the last 6 months, and which is surprising as well, is the FDI money, the check, what do you say, in the banking sector. Unprecedented, something like an Etihad Bank gets 60% stake in RBL Bank. How do you read the FDI into financials? And overall, as a sector, what's your take now? I mean, there is a lot of belief that the first earnings upgrade will come in the financials in 27.
So again, Nimesh, if we look at globally banks, they are generating billions of dollars of cash. Where will they invest? No one will be allowed to enter China like we have allowed entry in India. We are the only market where majority of our private listed banks are owned by foreigners. Which country will allow that? So we have provided a very good treatment to foreign capital in banking sector. And imagine some of the exits which private equity or funds have done in our private bank. I remember one large fund having a very, very big stake in a private bank, and then they exited at like 90% lower price than what it is today. So there is an institutional memory of leaving Indian bank early. Put all these things together, and then RBI gave a welcome sign for Yes Bank, MUFJ, for...
It's a big shift, right, from what the RBI stance was a few years back and now.
See, these were all, in some sense, slightly weaker banks which required a solid parent.
Yeah.
Now, it could have been domestic, it could have been global. This time we have given opportunity to global participants, and people have responded positively.
You think that trend is likely to continue? More FDI will come into the financials?
I think
It's a good proxy to the GDP as well, to the growth as
this
well.
is the only country where their capital will receive fair treatment compared to any other markets.
But Nimish, most of these financials, I don't know, look at RBL, not troubled,
Not
right?
troubled, not stressed.
Samman,
Someone to some
okay?
extent.
There's Yes, which got
Yes
money.
was needed.
Yes was needed. So it's where capital is required. I mean, mostly, right? What we've
No, but
seen so far.
Still to
I think before that there was IDFC,
IDFC first.
where there was almost a
is
large
good.
infusion.
Federal.
no stress, nothing.
Federal
They got
also.
good
Federal-
Federal, of course, is the...
Federal was the
So,
latest
It's
one.
not that they were weak, it's just that they were in need of growth capital to go to next level.
correct. No, absolutely. You know, what we'll do is, Nilesh, take a quick commercial break here. We'll continue the conversation on Editors Roundtable. Stay with us. More coming up. Welcome back. You're with us here on the Editors Roundtable. We're in conversation with Nilesh Shah. Nilesh, we talked about secondary markets. Primary markets, what is the...
They are on fire.
They're on fire.
And there are so many IPOs coming that many a times we are stretched to research them.
Yeah.
Thanks to AI, we are able to read prospectus much, much faster. And I'll give you an example also where a management company came, this was before they had filed DRHP, but thanks to AI, we were able to extract their past information from ROC. And you know, when they presented their data versus when we talked about, there was so much of a difference.
Wow.
Hopefully
AI
now
at
they would
work?
have cancelled their IPO plan till such time they get their act together. So there's too many companies coming out with IPOs, too much of supply. Some are very exciting, some are overly priced. And we have to be very, very cautious in investing in IPOs after doing our work. Thanks to AI, we are helping a
You're
little
trying to
bit.
keep up with the pace.
Has there been instances, Nilesh, where you really liked the business, but you did not put in money because it was highly priced? Or you think it's like a combination when दोनों साथ में हो जाता है या फिर नहीं होता है?
So again, like typically what's our approach to IPO, if you like price and valuation, both you go reasonably strong. If you like business and pricing is very, very expensive, you probably start small. Just keep your rumal on the table, learn about the company and then figure out why others are willing to give so much high pricing. When you don't like pricing and the business, it's better to stay out. So you try to size your trade depending upon how you have a view on the company.
So on that, and I know obviously you're not going to talk individual company names, but in general, what are the businesses that have come in, let's say the last 7-8 months, which have excited you? Most are tech. You know, every IPO that comes out, somehow or the other, the founders manage to put a tech tag on it. Some are genuine tech and are really, you know, using cutting edge technology. Some are tech for the heck of tech, right?
Yeah.
So you tell us, what has excited you?
So again, it's all about entrepreneur. We have been excited by a pharma company which is doing a wonderful work on basic research. We are excited about some of the consumer tech company. We are excited about old economic company also, which are into construction. So at the end of the day, Surbhi, it's the entrepreneur who is making money for you. If you like his vision, execution, and governance, then it's worth betting upon him.
So on that, now you have companies coming in, one listed today, where there is Pine Labs. I mean, no, there are companies where there's no one single promoter or entrepreneur. It's a bunch of private equity guys running the firm. So as, you know, as people with domestic pools of capital, how do you look at these businesses which are also coming to the market now?
So again, we have been investing into professionally managed companies. In the past, there were few companies where there was no official promoter. It was more professionally managed. And as long as professionals were working hard, they did deliver shareholder value. Now, again, because of this private equity influx, we are seeing companies where PEs are owner who will be on their way out. And it is run professionally by the board and the management.
So you don't get a sense of hesitation that there is less skin in the game because they are private equity and they're here to only exit. I mean, when the time is
So
right.
it's all about what is the vision the management is showing, what kind of execution they are doing. And there might be a skin in the game through ESOPs or something else. Now, if you enter, let's say at 110 rupee when PEs enter at 100, there's a lot of skin in the game. If you enter at 500 and he has entered at 10, then there is a lot less skin in the game. Maybe it's my skin in the game.
And mine too, and Nigel's too.
And Nigel's too, yes.
The other argument which a lot of people keep talking about is that domestic mutual fund money has given a lot of exits to private equity, the promoters as well. Look at the kind of blocks which promoters are selling. Today, Sagility, the promoter sold 16% and got sold. And the stock actually went up 5%. How do you read, what's your argument from a mutual fund perspective on giving exits to these PEs and promoters?
So Nimesh, many a times, you wake up in the night. Are we giving exit to FPI?
Yeah.
Am I telling truth to Nigel that you continue to invest? And am I giving exit to FPI? So obviously there are self-doubts when promoters sells, when FPI sell, you are worried because they are all smart people. But finally we go back to basics. Are this company going to grow or not? And second, even after exit, many a times, like in today's case, the promoter is still holding a substantial stake.
Absolutely.
And the third thing, there was an incident where an ex-colleague of mine in a business standard conference told me, why are you launching NFO? Markets are expensive. You should not launch NFO. You should learn from your past mistakes and so on and so forth. So I said, bhai, if you are so bearish, would you like to short Nifty for 10 years at this price? He said, no. I said, 5 saal ke liye to short kar de, bhai. Bola, no. Bola, 3 saal ke liye to short kar de, yaar. He said, no. So I said, you yourself are not bearish on market from a 3-year point of view. I am taking money from people for 5 years. Where is the question of mis-selling?
Correct.
So many people who are now bearish on the market are the people who haven't participated in the market. I can't be guided by them.
Right.
But should we have a self-doubt when promoters are selling? Answer is yes. They are far smarter than us. If I'm buying from them, I need to be 10 times more sure.
Nilesh bhai, before you let you go, last time you gave a call on silver. 2-3 call देके जाओ next year महीने के लिए. Otherwise people will bash us.
As I told Nigel, SIP करते रहो.
No, वो तो ठीक है.
वो
चालू है.
बस वही है.
But 1 or 2
See,
big
you can
calls.
be lucky once. You can't be lucky all the time.
No, it's not lucky.
But
it's
some,
smartness
but some,
as well, right?
one call.
One call.
So I'll just say that moderate your return expectations.
Sure.
Moderate हो गया.
That's saying moderate the return.
Within 1 year, so moderate return only.
बोल दिया था.
No, but so let me try and frame the same question in a different way. A lot of hopes are now, hinged on the second half. Second half has to be blockbuster. At least that's what's got us to 26,000. Will it be blockbuster?
I'll put my money on it. It's not 100% confirmed call, but clearly there is a cycle moving now in favor of double-digit earnings growth. Last 6 quarters we grew in single digit. That has laid the foundation for this double-digit to come. Monsoon has been good. Reservoirs are above historical average. Rabi season will be good. Tariff deal can happen. The GST Bachat Utsav has rekindled the consumer demand.
Yeah.
There's more money, about 6 lakh crore in the pockets of taxpayers, consumers, borrowers, speculators, and government employees. All these things should result towards double-digit earnings growth. Now, can it go from instead of December to March quarter? Yes. Earnings can get delayed, but it's not going to get deferred.
Delayed but not denied.
Not derailed.
Delayed.
Yeah.
Amol Majumdar.
But moderate your return expectations.
Absolutely.
Amol
Chak
Majumdar.
de India in real life.
India, absolutely. I mean, we'll talk about that post-wrap.
All right, fantastic, Nilesh. What a pleasure to have you in our studios. Please do this more often. Really charges
And
on.
the one-liners are the best.
Absolutely the best. Hey, on that note, we'll take your leave on this edition of Editors Roundtable. Many thanks for watching. Have a great weekend. We'll see you with the markets bright and early on Monday morning.